CF Industries produces fertilizers that farmers use to fertilize their farm fields here in the United States and around the world. One of the things that I learned shortly after graduating college, I got a job at an oil company, and I worked for the division that actually did exactly what CF Industries does. They turn natural gas into fertilizers, and farmers take those fertilizers and create crops, really bumper crops with those fertilizers. My name is Victor. I have an MBA and a lot of business experience, and I like analyzing companies. I analyze them to see if I want to invest my hard-earned money into these stocks so that they can go up in value and reward me with good dividends. In this case, I'm going to be looking at CF Industries. Do me a big favor and like my video and subscribe to my channel. I'm going to share my process and analyze CF Industries. I have a process I've created to evaluate stocks and consider investing in a particular stock. The first question is, do I want to be part owner in this company? Do I like the industry? Do I believe the management team's doing a good job operating the company? Is debt under control and less than 3 times EBITDA? And does the stock have a good discount? That way I can see my hard-earned money that I'm going to invest appreciate over time. And based on those answers, I buy, hold, or sell a stock. For a long time, oil companies and chemical companies have been converting natural gas into fertilizer. And it's a pretty simple, or not a simple process, but a very well-known process. And the inputs are natural gas, the outputs are ammonia, ammonia nitrate, and dry urea. These are used in the agricultural industry. Now, what changes is commodity prices. As natural gas goes up, the price of these fertilizers goes up. And as natural gas goes down, the price goes down. So the input cost is variable to CF, and the output cost ends up being variable as well. The demand for their product is pretty consistent because we as humans want to continue to eat. So we have demand on product, and that product puts a demand on farm fields, which then put a demand on fertilizers. So the business I kind of understand quite well. And I really like the business, especially if it's making money. Natural gas prices have been going down, and so have oil prices. And that has caused the overall revenue of this company to go down. But one thing I want to point out is, even though revenues are down, the amount of free cash flow that this company produces is really high. Just looking at the trailing 12 months, they've produced over $2 billion of free cash flow, which is very good. These guys have a low market cap of just over $8 billion. And looking at their outlook, they're seeing that prices have stabilized. And I've seen that in the oil markets. You've seen oil pretty much kind of stay around $80 a barrel, which is really good and consistent. So I think with that stabilization of prices, it's a good news for CF. So as mentioned, overall sales, I'm going to look at the first 6 months of the year. Last year, they were at $6.2 billion for the first 6 months, but now they're down to $3.7 billion. But if you look at the profitability, they're still profitable this year, even though revenues have gone down. And again, that's because the big variable cost is natural gas into their production, and the price of natural gas has gone down. So yeah, they're getting a lower end sale price, but their input cost is going down. So it's good to see the company's good and profitable. The company has been buying down shares. If you look at the number of shares that were around in 2022, they bought a significant number of shares, which is good to see. That way, each remaining share is more valuable. CF produces a high amount of free cash flow. In fact, this year is a good year. If I would just take the first 6 months and double it, it would be too high as a starting point in my valuation. So I had to temper it down, and I'll show you what I use there. The trailing 12 months is $2.1 billion. It's just very good cash flow. Keep in mind, they're just over $8 billion in market cap. So to produce 25% of your market cap in the form of free cash flow, that's really high. The balance sheet for CF is strong. If we look at the ratio, their debt to EBITDA is 1.66, and I'm looking for less than 3. So this basically means that in less than 2 years, they could pay off all their debt with their EBITDA. They carry a good balance of cash, by the way, so they have enough cash to pay off all their debt to begin with. I believe that CF Industries is discounted at 51%. And what that means is that each share is really worth $110 based on my calculations, but the stock market will sell you shares at $73.58, as many shares as you'd like to buy. Let me go over how I got there. So first, I'm going to take the 5-year average of free cash flow for the past 5 years, and that's 1.7 billion. And the reason I'm doing that is their trailing 12 months is much higher than 1.7. If I look at their current year and just double the first 6 months to get to a year, that's much higher, about 3 billion in revenue in free cash flow. So just to go one more level conservative, I'm going with the 5-year average, brings it down to 1.7 billion. I'm going to grow that by 4% for the first 4 years and then 2% indefinitely in the terminal value, which is all cash flows beyond year 4. All those cash flows I'm going to discount by a weighted average cost of capital of 9%. And I get to a value of all those free cash flows of $25 billion. I'm going to add the cash they have on their balance sheet and take away the debt to get to a equity value of $25 billion for the company. Their market cap is $14 billion. So it leaves a really nice discount of 77% if you look at the cash flows that CF Industries produces. Another way of saying this is that based on the free cash flows, each share should be worth $130 a share, but the stock market will sell you shares at $73.58. Earnings per share is really strong. Their earnings per share this year is expected to be $8.23. I'll give it a PE of 10 for this type of business. That's what the PEs are. And I'm just going to grow it by 2%. Based on this formula, I get a valuation of the stock of $71.62. And the stock market will sell you shares at $73.58. So there's a slight premium if you look at earnings per share of 3%. I combine the two and I take more weight in the free cash flow method and less weight in the earnings per share method. I take 2 parts free cash flow, 1 part earnings per share, and I get to a blended value that calculates a discount on this stock of 51%. So taking CF through my scorecard, I definitely want to be part owner in a business like this, and I like the industry. I think the company is very well operated, and the debt is well below 3 times EBITDA. Very nice discounts available on the stock. So this is a buy for me. I don't own CF, but I'll be buying some CF stock this week. Looking at where the stock is traded for the past year, you can see that the stock a year ago was much higher, but it's come down. And I think part of it is that oil prices and natural gas prices have gone down, from when they were in 2022. And the top line revenue, I think, is scaring away investors, and people are interpreting that, hey, a falling revenue line means bad news. But I happen to understand this industry. I'm comfortable with the reduction in overall revenue because this company continue to be very profitable, continue to generate a lot of free cash, and they pay a 2.17% dividend. If you look at the year to date, it's down 10.21%. This is a really good opportunity because the stock price has come down to a point where it offers up a big discount, a discount to enter into the company. And if you see oil prices go up, natural gas prices go up, their revenue is going to go up. So I think from this point, there's a better likelihood that the stock price is going to go up instead of it going down. That's my analysis on CF Industries. I hope you found it interesting. Do me a big favor and like my video and subscribe to my channel. I'd really appreciate that. With that, good luck investing in 2023.